Hey everyone, it's Rob Folia and Jessica Klein coming at you from Folia Properties here with Keller Williams in Nashville, and wanted to give you today's real estate market update for April 24th, 2020. And today, as I'm sure you can see in the basically the description of this video, we're going to be talking a little bit about affordability and basically what that means in today's market. The biggest reason why we wanted to come to you with this information today is it's our goal at Folia Properties to be educators and to inform you about what's happening in the market. I know there's a lot of uncertainty just in our world and also in our economy and our real estate market right now. And I think we're hearing a lot of different opinions. We're hearing some of like the overly maybe too optimistic opinions. We're hearing some of the probably too pessimistic opinions out there as well. And it's our goal really just to kind of give you the facts to help you maybe insert some logic into all the emotion that's being stirred up right now. And yeah, so let's go ahead and jump in. And if you checked out last week's video on when we just talked about the market and we talked about what the direction may go, where the direction may go with the market, some of the stuff may look familiar in terms of the buyer's market and the seller's market. And this is kind of what we're going to talk about because I've had a lot of people reaching out recently. They've been, a lot of home buyers, a lot of home sellers that have been thinking that, especially home buyers, saying, well, wait a minute, there's going to be fewer buyers, there's going to be more homes, and prices are going to be slashed in half on real estate. And it's like that's like the kind of too pessimistic view that I was just talking about a second ago. Just because that makes sense, like what I'm saying, and kind of why we're doing this to start off.
Yeah, makes sense to me.
Okay, perfect. And so anyway, just wanted to show you these seesaw graphics because ultimately, a real estate market does and almost never has that like complete balancing point. There's always at some point, usually some more homes for sale, like a buyer's market may end up being with fewer buyers, less homes for sale with more buyers. When prices are increasing, that's more of a seller's market. And we've seen this, what we see on the screen right now, the seller's market. You've seen this for years here in Middle Tennessee. And it very well may go to this. We don't know that, of course. We don't know what the future may hold. However, just with everything we're seeing, it very well may get there. But that being said, that alone doesn't mean that prices are going to just plummet and that homes are going to be pennies on the dollar. And that's what we want to get across today. And that's what we want to share with you and make sure that you're understanding where we're coming from with everything. So,
Yeah, I just want to interject there really quickly. I think what you said is spot on, that it doesn't mean, when we shift from a seller's market to a buyer's market, it doesn't mean that that's a recession or that that's, a huge economic thing. That's just standard. We're constantly, on this slow tilt back and forth between the buyer and the seller market. And it can be very subtle, and it's just part of normal everything, normal real estate.
exactly. No, well said. Well said, because you're right. And it may seem like a drastic change to some, gosh, I had an investor the other day basically act like an offer that was 60% of asking price was a great offer. And I was just like, shaking my head, like did one of those like head slaps that, that I was just like, I can't believe that that this guy is being legit right now. And his logic being banks aren't doing loans, this and that. Like he's in that sky is falling camp. And I get it that there's so much emotion that's going on right now. But again, we want to provide the logic because Jessica's right. Ultimately, even if this happens, what you're seeing on the screen, the buyer's market comes in, that basically there's more inventory out there. One of the, it's just really what that may end up meaning is that there's just more choices for the buyers that are out there. It doesn't mean that prices just automatically just plummet. And so what we want to show you, we've got a couple of things that really go into affordability, that go into home pricing as well. And let's just jump in real quick before I show anything. I just did a quick Google search here, and I'm not going to go into different links and all that. But just the first couple stories here about unemployment numbers. This is why I do think the market's changing. In the last month, we've seen 26 million people file for unemployment, which it's obviously terrible. And obviously, if you need something, please reach out to us because we're here to help. But the reason I wanted to share this with you is if we just jump back to the seesaw graphics, that's going to mean this. That's going to mean fewer buyers, unfortunately, out there because that's, if we just use simple logic of the 5 to 6 million homes that sell in America every year, if 2 million of those home buyers, now can no longer buy a home, that's only 10% even of the unemployed, unemployment numbers there. If 10% of them are, what I'm saying, all of a sudden there's fewer buyers, that's going to cause a shift. And so we need to be aware of this stuff as it's happening. But onto the main point of why we're doing this today, affordability. In fact, I'm going to close the unemployment screen so I know we hit that one. The biggest thing, honestly, that goes into affordability is, in my opinion, it's interest rates. Because the direction of the market, it changes very, very, I think, as Jessica said, gradually and then suddenly. So, typically prices aren't just going to plummet. They're not going to also skyrocket overnight either. And affordability is impacted by rates. A real quick Google search of what today's interest rates look like. I mean, you can see it on here. I'm not sure where Google's getting their info, but this is about what I've been hearing from a lot of my different lenders that are out there. Roughly, mid threes for a lot of loans that are out there. I'm not a lender, so please don't think that I'm quoting you a loan or anything. But we can't hook you up with a great lender if you are interested. But I want to basically play with a couple of numbers so you can see what you'd be looking like, what the prices would be looking like if interest rates change, because that's going to really play a bigger factor into affordability than anything. So what we've got here is just a very simple mortgage calculator. What this shows is basically, and I'm just going to plug in 4% as an interest rate. So that way, again, that's an easy round number. May even be a little bit less right now, but if this just, again, easy ways to calculate. And say you're getting a mortgage for $250,000 at 4%, you can see this is your payment every month, or your principal and interest payment anyway, every month, about $1,200. And there's an easy way to figure it out is that typically for every 1% that interest rates rise, it's going to affect your affordability as either a home buyer or the buyer's affordability of a home that you're selling, if you're a home seller, by about 10%. So meaning this, just say interest rates were 5%. Well, you may think, well, it's only $1,300 a month, only about a roughly 140, 150 a month. But if we plug in then 225 as the mortgage amount, all of a sudden we're back down to about 1,200. And that's where these numbers are coming from, that basically when rates rise about 1%, you're seeing, the affordability, what a monthly payment may look like, change by about 10%. Am I explaining that well, Jessica? Is that coming across the right way?
Yeah, I think so. Maybe just one more example, using maybe a different sale price or something like that, or maybe just go back and do that 4% again with the 225 and then go back to 250, so people can see. I mean, it really is like both of these numbers matter, the sale price and the interest rate, but a smaller change in the interest rate has a bigger impact than a large change in the sale price.
Well, absolutely. That's well said. Yeah, I'll change the numbers here in just a second. I was going to ask you a question about this, and please don't give any numbers of yours, but I know we've been talking about, you and your fiance getting into a home at some point here soon and buying a home. And, what's the biggest number that you're looking at? Is it the mortgage amount or sales price, or is it this? Is it the monthly payment and what you're going to be paying every month? Like, what are you paying the most attention to?
Oh, we care much more about the monthly payment. And, we're even going in and thinking like, okay, well, if we get some closing costs taken care of, or if we whatever, like, everything is just a calculation to get back to that monthly payment.
Exactly. And I'm glad you said that. And we did not practice this, y'all. So that was off the cuff. If you're, I'm glad you said that, because ultimately that's just about every buyer that I talk to. I can't remember the last time, I had a buyer that we were working with, or even a buyer of one of our listings that was like, that they were just concerned about this. I mean, obviously they were concerned about purchase price or sales price, but ultimately it was because of this. It was because of the monthly payment. Because unless somebody's paying cash, this isn't as big of a deal as this. The sales price isn't as big of a deal as monthly payment. So yeah, let's plug in another number here. I'll just pick a couple at random because they should be very similar. Just say a $350,000 mortgage, and here we'll just jump it back down to 4% to start. You can see 1671, so upper 1600s for a principal and interest payment at 350, 4%. If we were at, say, 5%, and what would 10% of that be? 35,000. So 315,000 for a sales price. Let's just plug it in and see if we're close. 5%, 315. See, it's upper 1600s again. It's about $20 difference, but still, I mean, the biggest reason that we want to get this across to you is that this part, the interest rates, that's going to play a bigger factor into affordability than anything. So for all the buyers out there, and like Jessica and I were around the same age, both probably clumped into that millennial group, and I've heard so many of our millennial friends say, You know, like let's wait for home prices to drop again. They're thinking, oh man, I wish I could have bought in 2008 or 2009 when prices were down, because they're thinking that, well, wait a minute, that's what makes a home affordable. And in a way it does, obviously, because, you know, a mortgage amount of 315 is obviously different than 250 or 200. But at the same time, as I hope y'all are seeing right now, just working through a couple of examples, you know, the interest rate really plays, in my opinion, a bigger factor than this, because rates can be volatile. I mean, you know, over 12 months, we'll see rates go from, you know, I want to say about 12 months ago, they were in the lower fours. Just about 2 months ago, one of our good lender friends, he told me that he got somebody locked in at a 30-year rate, like in the upper twos, you know, like 2.875 or something like that. We had one of our clients get refinanced at a 15-year rate recently at 275. I want to say she told me, and you know, so I just bring this up because like that plays a bigger factor into this than the total price does. Because ultimately, when the interest rate's higher, you're giving more money to the bank in terms of just interest that you're paying to pay back the loan. And so, does that make sense?
Yeah. Yep. I think
Okay.
that's exactly it. Yeah, it's more or less money to the bank. So the sale price is only half of your payment, really.
Exactly. You know, exactly. Before I do want to show y'all, because again, a big part of what we're doing is giving y'all some of the facts and letting y'all see the market from kind of a real view, not like just a either doom and gloom view as some people are doing, or just a sunshine and rainbows view, either, as some people are doing. We're wanting to give y'all the facts. Before I move on to the last part that I want to show y'all, and just some of the trend lines that we're seeing and how that play into affordability, and more so into the sales price affordability and all that, and the quote unquote deal affordability. You know, because we won't know what interest rates look like. In my opinion, there's not a trend line for that. That could jump, that could drop. We just don't know. Before I do though, Jessica, are there any questions on Facebook Live before I jump to the last graphics that we have?
Nope, it doesn't look like it. It looks like Charlie loves our graphics.
Awesome. Well, Charlie, appreciate the love, and yes, absolutely. Well, let's keep going here. And if anybody's seeing this on recording too, feel free, if you have questions, to reach out to us. I mean, I know we have this on our YouTube channel, but on Facebook as well. You know, feel free, if you're seeing this after the fact, to either comment on it. We're happy to engage with you, or PM us, or you can email us at info@foliaproperties.com. And still, let's go into, before we finish up here, I want to show y'all just two quick things. One being, you know, just a kind of a trend line that we've seen for sales price, just in what I've got here, and then we're going to go into sales price to list price. So basically, a ratio of what people are asking versus what they're actually getting. And let me move this out of the way. So this right here, what we've got is Davidson County. So, you know, Nashville's county for basically the last 12 years or so. And again, these are numbers straight from RealTracs, the system that all of us realtors use to list our homes. So these are these aren't numbers that are being thrown around by somebody or somebody's manufacturing. These are the legit numbers from our realtor system. And these what we've got here is everything in Davidson County that has basically that's sold going back all the way to early 2008. And these are single family homes. They didn't include townhomes, land, manufactured homes, anything like that. Just wanted to keep single family on here. Obviously, if you've got a different county that you have a question about, or a different, you know, type of property, feel free to reach out, because we're happy to give you that information as well. The reason I wanted to show you all this trend line is everybody thought during the last recession, which I'm sure we can all agree about, that the last recession was awful that we were in. I mean, you know, a lot of people lost their home. There were just a lot of, I mean, so many people were out of work at the same time. It was rough. And if you look back, you know, and I wish I could even go back to like 2006, you know, to 2007 here as well. But even here, you can see like when the housing market was really down back in, you know, because a lot of people would say it bottomed out around here in 2011. You can see the trend line wasn't a drastic drop. Like the bottom didn't just come out, you know, like right here, just pick even the high point here in July 2008. Average sales price in Davidson County was 223, you know, and then if we take what looks to be about the lowest number right here, it's a hair below $200,000. So, even that's only about a 10% drop in that 2-year time period in what was that, June of 2008 or July 2008 to June of 2010. That's not a big difference.
I mean, we just showed numbers where, a 1% change in the interest rate makes up for that difference.
Exactly, exactly. And that's the thing. So, like, imagine if, like, almost just play the what if game for a second, or the hypothetical game. If you were a home buyer in 2007 or 2008, and you're like, man, the market's changing. I want to get a deal. Let's just wait. Let's just keep renting for a year or two and just let prices drop. And at the same time, if rates went from, like we just talked about, say 4% to 5%, that just cancel it out. You're
Mhm.
still paying the same amount every month to live in the same home. Yes, maybe the principal amount's different, but your payment's the same. You're paying more to the bank at that point, and I'm just throwing that out there for you. And then the trend line that we've seen really since the bottom here in 2010. I mean, yes, there's a couple of ups and downs in here, but overall, I mean, it's just been a steady rise. I mean, you can see basically values have doubled. The average sales price has doubled here in Davidson County in the last 10 years or so. It's very unlikely that we're going to see this again down here. I mean, even if we do end up seeing a similar thing to this, where it drops roughly 10%, I mean, we're talking about going from 420, roughly 419 here, down to the high 300s. It's not like, for an average sales price, it's not like we're looking at a 420 to a 220 drop. So,
Mhm.
so again, if you're a buyer out there thinking that, hey, something's going to happen, like it's going to make things easy, that's yeah, that's kind of unrealistic, just to be real with y'all. And, I just don't see that happening. That would take
Yeah.
10 years of appreciation off the table.
Yeah, and I think another really important thing to note about that time frame back in 2008, the recession was caused by the housing market, basically, or because of the loans and the way that everything was being processed, and the lack of um, what is the word that I'm looking for? Basically, there weren't enough restrictions on
Mhm.
who could get what kind of loan and what kind of qualifications that they needed to get a house. And so people were able to purchase homes that they weren't technically able to afford, and that's what drove the entire recession. And so this graph that we're looking at in that section in 2008 is like, this picture here is what caused the recession, and what we're coming up against now, and what we've seen in any other recession in American history. It's not driven by the housing market. The housing market is seeing aftershocks, essentially. So even if we do see any kind of aftershock, it's not going to be something like we saw in 2008. Just kind of a different animal.
Well said. No, I think you're absolutely right. It's a well said point. The aftershock, because you're right. It is more of and that's kind of what we're seeing right now, if you think about it. Because, like, some of the numbers we showed last week when we were looking at some of these trend lines, we haven't seen it yet, but we see some subtle hints that it's coming, like days on market rising, things along those lines. And I'm sure. Well, we just showed y'all the unemployment rates. I'm sure we all know somebody who's been affected, either who's out of work or their business is closed, or what, fill in the blank, whatever it looks like, that that's going to affect things. We just don't know how yet. But at the same time, it's unrealistic to think that it's going to be back down to here.
Right. Yep.
Uh, and then the other thing I just wanted to share with y'all, let me get this little Facebook thing out of the way, is the percentage of list price. So there's a stat that a lot of, like, we use a lot of times when we're talking with some of our sellers, in terms of, like, what percentage of our list price we get for them, like sales price to list price ratio. You sometimes hear it called. And let's look at the average. Average is probably better than median. And so we'll let it crunch the numbers here for a second. And there we go. And so this right here is the same length of time trend line that we saw for this average sales price to list price ratio. And again, same criteria. Davidson County, all price points, all single family homes. Again, so no townhomes, no condos, no land. And this just shows how much on average people were getting. So, and the reason I wanted to bring this up real quick is the deal aspect. Because again, that's been a common theme I've heard from a lot of investors that are out there. That, well, hey, I'm just going to get a deal now. I'm just going to be able to just get a killer deal on a home, pay 60 cents on a dollar because the sky is falling type of thing. Well, I think we could all agree that the sky in real estate kind of fell, roughly 10 years ago. and even if you look here at the very beginning of this trend line, 97.4% in January 2008, all the way down to here. That basically what this is saying is at the very bottom, and what is that, July of 2011, that the average sales price to list price. So meaning if a home was listed for $200,000, on average they were getting 95.5% of that, which is roughly $190,000, about 5% off.
Mm-hmm.
And and that's changed dramatically here in recent years. I mean, just look at the peak in the middle of 2016, 99.1%, which is insane. It's almost like not being able to get anything off of the price of a home. And I just want to bring this up because even at the worst market that we've seen, it was 95.2%. It's not like we were seeing it, down to 85%. People were able to negotiate 10, 20, 30% off a home. And so the biggest reason I want to bring this up, aside from maybe helping people understand that those 50 cents on the dollar deals may not be happening right now, and they probably won't ever be happening in on a regular basis. At the same time, I want our sellers to know, and our potential sellers to know, that the sky's probably not going to fall here either. It may go down from here. I mean, you can see the trend line was actually going down before all this started. Just like we talked about last week, how the inventory levels were rising a little bit, and I can actually probably pull that up real quick just to show y'all what is that homes for sale that we were looking at, and how so let's crunch the numbers and I'll get right back to it, and how you can see it's actually even more dramatic when we look back to here and how many homes there were at the worst market that we were seeing. But the trend line that we were seeing in recent years, because we had it pulled up, I believe, 3 years last week, how the trend line was steadily going up here over the last few years. That you can see that's kind of the inverse to this, to where in recent years it was going down, the average, and that's just simple supply and demand, simple economics.
Seesaw. Yeah.
Exactly. That's this again.
Mm-hmm.
There was more inventory, so we were seeing the prices go down. But it's not even the average sales price going down. It's the average sales price to list price. It's there being more homes out there, so buyers are able to negotiate a little bit stronger. And so I hope that makes sense. Just wanted to share that, because even what does that say, 98.5% for March of this year. So as a pandemic started, it's still still we're seeing for again that easy simple math, $200,000 home selling for 197. So it's not like we're seeing that home sell for 180. That's not happening right now. I'll be really curious to see in a week or two, once April's stats are out, is this staying around here? Is this going down? Is it going up? And we're going to monitor that, and we're going to continue to come to you every week here with these videos on Facebook Live and sharing them on YouTube. I know we're probably way past the 20 minutes or so that we had allocated for this, though, Jessica. What questions are there? Any questions on Facebook or anything that we haven't covered that we probably should have gotten into?
It doesn't look like there are any questions on Facebook. I will say, even when you first pulled this graph up, I was thinking, oh my gosh, it's so dramatic. But then you look at, on the left-hand side here, I mean, these are tiny little changes, right? Like from the bottom, like what's that very bottom number? So 95.2. And then go to the very top number, highest you can find. Yeah, I mean, it's 4%, right? And that's like, I mean, that dip down there, it took 3 years to go from 2008 to the bottom of the market. Mm-hmm. And I mean, it was really like house by house, 4% is not a crazy number.
Well, exactly. And, I've got to say too, and I'd probably be remiss if I didn't say that's why it's so important to hire the right agent. And I don't mean to sound like we're, patting ourselves on the back. And it's just, ultimately when you're working with an agent who's honest with you, is going to tell you the facts, going to not just tell you what you want to hear, but being willing to actually, lay it out there and say, hey, this is what we're working with. This is what the market looks like. This is what the comps look like, helping you really understand what's happening, not just, trying to put a sign in the yard because they don't know how to price the home. That's why it's so important, though, to work with an agent like us, because ultimately we're going to tell you the truth, and that's what helps these sellers get 99.1%. Mm-hmm. Not every home sold for 95.2% in 2011. Some were still getting up in this area, if you can see where my mouse is, and some were getting well below 95.2% as well. I mean, that's why it's an average. And so, again, that's why it's so important to hire the right agent, somebody who knows the market, studies the market, and is willing to give you the real viewpoint on it, you know?
Yeah, absolutely.
So y'all, again, if y'all have any questions, or if you're curious about your county, if you're curious about any of the stuff that we're bringing up, comment below. Even if you're seeing this on recording, comment below. If you're seeing it on YouTube, comment or reach out to us. Again, you can email us at info@foliaproperties.com. So it's info at my last name, so FOGLIA properties.com. You can also give us a call if you want, 615-591-5665. We're happy to answer any and all questions that you may have. We want to just make sure that you're informed, that you can make the right decision for your life, for your families, for just your situations, because ultimately with everything changing, it's important to know the facts and to put a little bit of logic in with the emotion that we're all feeling right now. And so unless there's anything else that you want to share, Jessica, we can probably sign off here, and just if y'all need anything, give us a shout.
Yeah, I think we're good. We'll see everybody next week.
Awesome. Thanks y'all for tuning in. All right.